I will send this recording through. So if you have any question at all, feel free. Unmute yourself, ask a question, and whoever that knows the answer will just jump in and then let you know what they think. And if anybody has no idea, then yeah, I'll take over and then run through with it. So door is open, guys. The door is open. Okay, so the first question is what? Francis, I was watching your last recording where you explained break blocks. I didn't really understand where it mitigates and when to enter. Could you go over her again, please? Okay, so break blocks. Okay. So if we talk about break blocks are quite simple in their usage. Personally, in my experience, using breaker blocks is more of a high risk, right? Because it's not so easy to predict which way price is going to mitigate and where to put your stop loss. All right, so assuming price is coming down in a downtrend.
To read.
Please, if you're not asking a question, can you mute yourself? Right? Price is coming down on a downtrend, and then we have a solid break up like that. Usually, as the trend is coming down, this will probably be the last candlestick, right? The last buy candlestick before the break of this market structure. Right? So the last buy candlestick before the break of this market structure to create this low. I think I'm gonna have to mute people. Right? So the last buy candle before the break of market structure, in a nutshell, price should respect this particular area. Once price gets here, it should respect it and continue the trend. This is what we expect to happen. Sometimes this do not happen. Instead, we have this happening where this price will shoot out this candle, break the market structure to the upside instead. All right. So at this point in time, that same candle I was looking to sell off becomes the area I'm going to look to buy off. Right. So once price retraces back into this zone, then I will look to have a buy position from here to the upside, with my first target being there and my stop loss. Most probable, you want to keep the stop loss below that particular buy candle. But what I've realized is back testing most of the time, price do go straight through the candle before it reverses. So to be in a safer side, I try and keep my stop loss at a minimum, let's say 15 pips, depending on what areas that I'm looking at. So minimum 15 pips below the breaker block, right? So that becomes your entry. Your entry could be at the close of the buy candle or the 50% of the buy candle, like we do with institutional candles. So this is how it's going to look like. So the open will be like that. Sorry, the close will be like that with your stop loss sitting 15 pips below the area, let's say there, right? With your first target. This is why I said the risk to reward is not great trading breakers. but most of the time they are very solid and they work very, very well. They work very, very well. The risk to reward is not great compared to trading institutional candles, right? Once price gets in here, that becomes your first target, and your next target, you're looking at the extension level. So at the extension 1.2, 72, 1.4, 1.4, 1.168, which could increase your profit margin drastically, and your risk to reward becomes a lot better if price could hit those areas. But yeah, that is the main thing about breaker block. So in this case, this area becomes your breaker, right? This area here becomes your breaker. And breakers are signified most of the time by what we call rejection, because what happens is they try pushing up and they get rejected straight back down. So they most of the time appearing as rejection blocks. Okay, so I see. So it's basically the IC that will cause breaker market structure and grab liquidity. Yes, that is the key thing about it. The key part is the grab of liquidity. If we do not take any liquidity prior to the move up, then you can't treat that side as a breaker block. It won't work. That's the key thing about it. That IC should be able to break market structure, sweep liquidity, and then break market structure to the upside again. So double break market structure both ways, right? Does that solve the problem for breaker blocks? I think I can go on the chat and try and find some few examples on breakers. How to enter the breaker, enter trades. Sorry. Let's try and find an example. Oh, okay. All right, let's look around this. Right, so this is a perfect example of a breaker price action. Right, we took the liquidity off around this area, leaving us the opportunity of this particular candle right here, or we could even take this, because that was the last buy actually, this wick right here to there, right? And see, after the break of market structure to the downside and to the upside, price came straight back down to the same candle. If you're wondering what kind of candlestick I'm looking at, it's this one. Let's try and go to a smaller time frame and see if we can get even a clearer version of it. So let's use the replay to make it a lot more cleaner. All right, let's take this off. So looking at the chart right here. All right, looking at the chart right here. Follow me very well, guys. This is the last buy candle before the sell move. So I am going to pull a line right here at the close of that buy candle. Now we're going to play and see what happens price once price gets to that area. It didn't quite come to the close as I was expecting, but then it played up the wick right there. Oh, come on. So this right here is a clean example of how breakers actually trade. All right, so let's cut it again and try from the close, the high of that particular area of the candle, right? Our last buy candle with our stop loss below this particular candle right there. Let's play. Right there is your entry. Right there is your entry. Your first target will be that high right there. Right. And if we should go in detail, you can see on 5 minutes time frame, we had an SMS and a breaker market structure confirming that price has reacted off perfectly away from the breaker block, right? If I should go in 3 minutes, we can even have a more precise entries around that very area, right? That buy candlestick right here, 2 minutes, right there on that wick, that rejection wick, right? And 1 minute, that last buy candlestick right there. Price reacts off it nicely, and then we get a nice buy. That's my TP, right? So this is how we can correctly use breaker blocks in our trading strategy. If we get price sweeping that liquidity over here, then we can consider that last buy candle that took the liquidity, and then the breaker market structure to the upside, we can trade off it as our breaker block with our stop loss below it. Does this answer the questions about breaker blocks? Can you explain to me about why corporate volumes? I'd see depending on our time, if we can reach into that, that would be great. But that's time's all right. Okay, so we're done with breakers. I believe that makes proper sense to most of us. I think we've got some few new people. Come on, bit well, welcome. Damilola, you're welcome. You're not on the start trader, you're welcome. Persia is on as well. Welcome, Persia. It's been a while. Winston is also here. You're all welcome. Nice. Okay, so that's really the point about trading breaker blocks. So you said buy candle, but you mark the wick. You mark the wick of the sell candle. Nah, this is the candle I'm at. So the sell right here. Don't get it wrong on this chart. The sells are the blues and then the buys are the black. Sorry. Some of you might be confused because of the color changes I have on my charts. So the sells are the blues and then the buys are the blacks. Yeah. So don't get me wrong. It's just the high of it. Yeah. Don't be confused on that. Okay, sweet. So guys, that is it with breaker blocks. I will go through the next question I have on my list and then see if I can provide a sweet explanation to that. Okay, so which liquidity is likely to be grabbed first? An uptrend or a downtrend? Oh, that is totally in no place for anybody to tell. We all don't know. I can even work for the banks and still not know which liquidity is going to be taken first. It's a game of probability and a game of the rich. So if you're rich enough to push the price in your direction, good for you, right? But as people like us, individual traders who's trying to learn the ways of the institutional traders, I will personally say, just wait, follow their steps. They will always give you a clue. Follow the steps of what they're giving you, and that's how you can make money, right? What are the steps? Wait for the breaker market structure. Identify your point of interest and try and play off it, right? You don't have to guess which liquidity is going to be taken first. We all know on the charts, there is liquidity on the app, there is liquidity on the bottom. Which one is going to be taken first, right? Let's have a look around this area, for example, right here, right? I have liquidity sitting down here, right? Same way I have liquidity sitting up here. Do I know which one is going to be taken? No, I don't. But I can patiently wait for price to play out, right? Sit around and see, okay, we grab that liquidity right there. Now, what do? I know we've grabbed liquidity up there. The next step is if I see a break on market structure, then it's likely price is going to give me an entry. I'm going to go on a smaller time frame, anywhere above the liquidity grab zone, right? Anywhere above the liquidity, which means anywhere here. I want to see a break on market structure. We broke market structure here. So the area I am going to identify to first try and play off is here as this institutional candlestick. We came in here, it FU'd, took you out, and then came down, right? The next step for you is to identify another area where we could possibly mitigate and go away, right? There is an imbalance here, which price could also come back in here and mitigate. Let's have a look. Continue playing. Then price just went straight into the imbalance, right? And then started dipping. So you identify your point of interest and you stick to your point of interest. If you get the trade, fair enough. If you don't get it, you wait for another opportunity and you get your trade. That is what you do. Let's wait it out and see what happens. We have another break on market structure to the upside, right? Let's pause it right there. Another break on market structure right there. So the last sell candle right there. These are the pushes up there, right? That gave you. So anywhere around this area is another point of interest we could look into if price we come around that area. If it don't, is a trade gone. You don't have to chase after it. You don't have to run after it. And a perfect example of how breakers actually really works, right? Look around that area. That could have been an entry right there. Price came straight for the breaker and then started dipping. That could be an entry right there, right? And that must have hit stop loss TP already. Now you have another break on market structure. You follow the structures. You follow the structures and you start looking for areas of mitigation. Which area have we not mitigated, right? Then you stop. You look, where could we possibly come back and mitigate? And look at that. We took the liquidity on the upside and now we're taking the liquidity on the downside. Who knew this was going to happen? Nobody. Whoever that tells you they know exactly where price is going to go first, it's just, they're probably just playing with your heart. They're just trying to tell you, yeah. I don't know. It's just stories. It's not true. We all don't know. And I can't lie about the fact that I know or not. I don't know. I don't. Right? So you wait, a perfect example of breaker entry as well, right? We took liquidity up here. I actually forget that. Took liquidity up here, right? And everywhere here is a liquidity taking price action. All right, let's actually sweep all these areas and try and play off again and see what happens. So my last sell candle before the buy move. Now I'm going to mark this particular wick right here. See what price does when we break that area. Came back to that particular line and look how many times we tested the area, right? So that could have been your entry right there with your stop loss right there. And that is after we took the liquidity on the upside, right? So this particular trade would have been your perfect entry right there for a short. Your stop loss right there. your target right there. And that is a 1 to 4, right? 1 to 4 straight away. Let's keep playing. Target hit, right? We swept liquidity on the upside and we targeted the liquidity on the downside. Simple as that. What we did was we used the knowledge we already have, how to enter the market, whether we play off an institutional candlestick, whether we play off an imbalance, whether we play off a mitigation zone. So guys, we can't go any wrong. We can't go wrong if you have the knowledge. Like I said, price will never move without clearing liquidity. That's the key thing about this market. So after we've cleared liquidity, we try to find from our entry booklet, how do we enter the market? Enter off an institutional candlestick. If I want to enter off an institutional candlestick, what do? I wait for a break of market structure in my direction and a pull back to an institutional candlestick. Then I can enter the market. If I want to play up a breaker block, what do? I wait for the breaker market structure, and breaker block will always give you a significant shape. Like I said, right? It will give you a significant shape. Up, right? Down, up, and that clear liquidity right there. The moment you see this, it's trying to tell you we're gonna have a breaker block entry right coming. And we break the structure right there. We enter off the breaker, the last sell candle before the liquidity grab. And then we broke the structure of that sell candle, right? Enter straight into the sell candle. And there we go. Target hit. You're done for the day. And this happened this morning. What time did it happen? I think it happened at 1 a.m. in the morning. You're probably done for the whole of Monday after taking this trade. Have I answered the question on liquidities, please? Whoever that asked that question. All right, brilliant, brilliant. Sometimes I will mark an IC for entry, but price will reverse at breaker block. Sometimes breaker blocks will be marked, but price will rather respect the IC. Therefore, which one should I really look out for? I just gave you the secret in this explanation that I in this explanation I made. Breaker block setups are so clear. They will always be in a specific shape. Institutional candle setups are also very significant. They're different in their own ways. It is up to you to identify which areas you want to play off. I just answered that particular question in this explanation I just made. You could go and try that. You could go and practice that, and then you see exactly what I'm trying to say. I think, let me try and see some more examples. Let's do some more examples. That may help. Yeah, look at this 1 hour. Look at this 1 hour area, right? This is a mitigation setup right now. Just right here is a mitigation setup. Why is it a mitigation setup? Because I have the mitigation sign right there, right? Up, down, up. We took the liquidity off here. So the last buy candlestick that swept the liquidity. There was liquidity here, there was liquidity there. So I can see this area as my first breaker, and this area as my second breaker. All right. Now pay attention. I'm going to start playing. Let's go down to the 30 minutes. All right. In the 30-minute, we broke this breaker. I can see we disrespected it and went straight to the institutional candlestick right there. And then we started dropping. Now that drop right here, this is my last breaker zone, right? Let's pay attention to this very area now, guys. Already on the upside, we tried that area and price bounced off it. So it is more likely when we break this area, we will come back and retest that particular zone again. Now let's play it. Let me pause it right there. Right? Look at how many times when we broke the area, price came back, tested it 1, 2, 3, 4 before the drop. We dropped, came back there again, tested it 1, and then we dropped. Follow me, guys. Right there again, almost got to that same area. And this is the last area price got mitigated. Price got manipulated in the market. Let's see what is inside this particular wick. Inside this particular wick, let's see what is in that wick. Let's change this color to yellow. Follow me to all I'm doing is I'm investigating that wick, what is inside that wick. Let's go to the 5 minutes. 3 minutes. 3 minutes. 1 minute. So 1 minute, that was the last up candle before the sell, and that is where price went. Now let's play it and see what happens around that area. This is how you learn from your mistake. Why did price not do what I was expecting it to do? You learn. And remember, there is liquidity buildup right here. Right? Now let's see why price will go back up there. It's taking too long. I can't wait. Well, let's play 3 minutes and see. Can get it a bit faster. Still too slow for me. Pause. There is something that happened around this area. Let's digest it a little bit. Do we have a breaker trade right here? Do we? Look at that. A breaker trade right there. With your stop loss down there, just keep playing. That's your buy right there. First target hit. Second target, liquidity pull up here. Liquidity pull up there. See how we went straight for that liquidity. Let me pause it right there. Pause. We went straight for all them liquidities, took that liquidity, and since then, we started seeing price drop, right? Price was dropping up the last sell, sorry, the last buy candle once again. The last buy candle before the break of market structure. Went straight back in it. That's your sell right there. Came back up there again. And that is a stop loss. You hit stop loss. We are back into the same area for the liquidity grab, right? Now let's follow it. We've taken liquidity, follow it. We've taken liquidity, we are in the zone. This is a breaker block trade right here. In the breaker block again, we broke it into the institutional candlestick. Test the breaker zone again. Let me pause it right there. Do we see how price has been playing around with breakers and institutional candlestick at the same time? Reaction of the broke it, went straight for the institutional candlestick, dropped down, retested the same area again, and it started dropping. We have a breaker setup again, once again here. Let's see what happens if we break this zone. Test, 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 break. Dump. Just like that. It don't matter. We all don't know which direction price is going to go. Let me pause it right there again. Once again, price is about to reverse. Why? Break of market structure here. Break of market structure there. I can either play of this area or, oh, come on. Or this area. Now let's have a look. There we go. This trade had already hit your profit. Now your institutional trade also going to hit profit. So one system, right? One system, you enter the trade of this mitigation, sorry, break block right there. Your first target was there. You're out of that trade, you hit your target. Institutional candlestick trade right there with your stop loss right there. Your first target up here. You've hit your target with that same pair. And there you go. Some more profit from the institutional area. Post right there. Some more profit from that same institutional area. Now I want to monitor the last buy candle before the break of market structure. That's going to be this one. One pair, target, hits again. So you could be playing around with this same pair for the rest of the day, literally. Break of market structure. The last sell candle right here. Let's see if there isn't any sell candle here in the smaller time frames. There is one here. Let's see. 8, 7, 6, 5, 4. Still there? 3, still there? 2, still there? 1. So I can see that zone still there on all the time frames. Now let's keep playing. Back to the 15 minutes time frame, but that's the zone we've marked. Now play. So now, following the uptrend and what we have right now, our point of interest on EJ right now becomes the zone. We would be looking around the zone and see how price reacts around that area once price gets there. All I did was I followed the price and what it's been doing right from when it started reversing. Right? So what sort of reaction do I get from this area? If I get price break this area, then I'll start looking for the retracement and retest of that area on the backside and continue selling. Am I making some sense? Am I helping somebody to understand this? Oh, why does it look so easy? It looks so easy because I took time to backtest it. Simple as that. Just take time and backtest this, and you start seeing how price is doing the same things over and over again. Look at all the areas we marked and see how price has been mitigating them areas over and over again. See, this area I spoke about ages ago. Now, let me stretch it and see how price came back there. It's not by mistake why price came back there. We had that mitigation area marked out earlier on this area. We did not get the reaction instant. We got the reaction of the institutional candlestick. And sometime in the future, we came back there again, right there. Do you all remember I did that? Do you remember I marked that zone looking for mitigation over there? And that did not happen. After some time in the future, we came back to that same area because those are the areas they keep in their orders. All right, somebody is asking me to go over go over a pair like gold. Okay, let's have a look. Okay. That's the key. That's the key. Mark the map and see what price, see how price react to those areas. How do we recognize or know where real reversal points are? Nobody knows. I'm not going to lie about it and tell you I know exactly how price reverses. I don't. But I can give you the skill that will get you into the trade when the reversal is happening, right? I can give you the skill that will get you into the trade when reversals are happening. And that's all you need. You don't need somebody who's gonna tell you if you do this, you're gonna see the reversal. Nobody knows. They don't have power over the market. They don't. Right? So let's have a look on gold and see what happens on gold. Right? Let's back test it from quite far behind and see what sort of. Let's start from here. Right? All right. Now I have a breaker structure right there. In my last sell candle before the breaker market structure. Sorry, my last buy candle before the breaker market structure. Based on the 1 hour time frame, is this I see. Because the breaker market structure happened there, right? It means this is the candle that caused it. Now let's go on smaller time frame and confirm if this is indeed the last one. So let's go on the 45. Yes, it is. 30. Yes, it is. 20. No, from the 20, it's not. It becomes this one right here. That caused the breaker market structure there. Right, so that is our breaker right there. What about from 5? What do you mean by what about from 5? From 5 minutes? Yes, I am going to keep going down and we shall see. We shall confirm it. Don't worry. Okay, so let's go to the 10 minutes. We still have that same area. Yes, we still have that same area. Let's go 9. Same area, 8. Same area. 7. Same area. 6. Same area. Why do I choose this over the first? Why do I choose that over the first? Which is the first? Which one is the first? If you can annotate my chat, feel free to do that. This one? How about this breaker market structure? Or does it not count? The 1 hour IC that you identified. But I understand that, but how about this load right here? Does it not count as part of the structure? It does. And this is actually the last up candle that took this low. So that becomes the sell candle that caused all these breakup structures. That becomes the sell candle that took all the structures. Am I making sense? Can I have a 2 in the chat box if I'm making sense, please? So everybody else can see, but one person, Williams, you can't see what I'm trying to say. This is the last sell candle right there, right? That took away all these lows. That took away all these lows right here, right? So everything here, everything else around this area is just part of the information we have, but not really what we are looking for, right? And pay attention around this area as well. Let's keep going on the smaller time frames and confirm if that is the area we want to look as a breaker. Why not just go to 1 minute and look for last sell candle? No, you actually have to go through the time frames to confirm, because people need to follow the structure and what is really happening, right? Francis, please, what is the simplest way to distinguish between BOS and liquidity graph? Okay, BOS and liquidity graph is about knowing market structure, and that's it really, knowing market structure. And then earlier waves. Earlier waves is one of the key market structure waves that occurs. Is another thing that I think is properly mastered. It gives you high probability of choosing when there is a liquidity graph and when there is an actual break market structure, right? Right there. Let's keep going. Let's keep going, guys. All right, we still have that same area as our sell, 4 minutes. We still have that same black candle, 3 minutes. Still have it, 2. And it's still the last one. It's still the last one, right? So now, look down here. When we grab the liquidity around the same area again, right? When we grabbed it, this is the last sell candle right here. Sorry, the last buy candle that took the liquidity down here, right? The last buy candle, right? That one we can also mark and see what happens in the future with it. I'm going to cut from there, actually, because I want us to follow the story. On the 1 minute, there is an institutional candlestick also here, the last sell candle before the buys, right? Now let's follow the moves and all the areas we have marked to see how price trades. We have our zones marked now, guys. We have our zones marked. All we're going to do is now we're going to watch price. In my opinion, BOS is the direction of the trend, but liquidity graph is the opposite direction. I stand to be corrected. It's perfect. Well done. Sweet. Right now, let's play. Price hasn't entered that yet. Now let's see. Right? We broke the area, back tested it 1, and then went up. Oh my, oh my. Have you seen that, guys? The area we marked off as our mitigation or the breaker zone, look at how precise price came in. And even if you had your stop loss right below it, you were still in that trade. You were still in that trade. So the problem is identifying the right candlestick that are really doing the magic. It takes time. Somebody is annotating my chat, please. Can you take the annotation off? iPhone. Who is iPhone, please? Can you clear the annotations for me, please? It says your name on it, so please check it for me. Try and get it off. So, guys, it's as simple as that. The same area we marked out as the last buy candle that swept this low, cleared all these lows. Price came in, and look at how precise it was. You might be wondering, okay, this guy has probably tried this over and over and over and over, and he's going to show us the same thing he's tried. I was using EJ. I didn't even know I was going to do gold today. I didn't even know I was going to do gold today. But look, the same precise area, price came, and that's it. Right? Now we've played the breaker and we've gotten the reaction we want. The sign that gave you, that made you aware that this area is really going to play is look at how price tested this area, right? Rejected, broke it, tested it, rejected, and went higher. We came back, tested the area 1, 2, 3, 4, 5, whatever numbers you can put on it. Boom in it, and that's it. Break a market structure right there. Price keeps on going. Let's keep on playing. Let me pause this right here. Is there anybody on this call that trades price trap? Is there anybody on this call that trades price trap? In the chat box, sometimes. All right. Anybody that trades price trap here, go on your charts, the areas that you trapped, or you can go and tell somebody the area that they've trapped and that has given them the TPs. They should backtest it with breaker blocks and come back and tell me why it plays all the time. A price trap that will hit stop loss will never have a breaker block around that area. I can dare them to go and backtest this and come back and show me the results. It won't be anything less than 90%. Anyway, let me go ahead. Let's keep playing. We've marked out few areas. Let's see how price reacts of them areas. How can I trade breaker blocks? I'm just showing you, mister. Let's go on to 2 minutes. Sorry, I'm just showing you how to trade breaker blocks. And you're still asking, how can I trade breaker blocks? We looked inside this area, considering the last buys, right? Oh my God. Sometimes it's very funny how Take some of these things to be. Entry there, stop loss there. Target there. So this is how your setup is going to look like. Come on, what's up? It is. I only trend in that direction. Or do you? Okay, so somebody is asking, do you determine trend first? What is trend? Trend is liquidity, guys. I did this. I solved this problem on the last Q&A that we did. Last Q&A that we did, I told you the trend is liquidity. I don't believe in directional bias where somebody tells you today we're going to have a bullish day, everything is going to be bullish. It's never like that. Where liquidity has been taken, we go to the opposite one, where liquidity is available to be taken. Right? Why were you everywhere on my chat that I see liquidity? I'm just going to mark it and wait and see what happens there. I'm just going to wait and see what happens there. Right? So 1 to 12 target hit right there. I remember I was in that trade from 1 minute time frame. Let's see what happens around this area. I entered this trade on 1 minute time frame. I think I remember. Yes, I was in this trade on 1 minute time frame. I remember we had a swing, a failed swing over here, and then my last buy candle, sorry, my last sell candle right there with my stop loss below. I remember we did have, I did enter this trade on 1 minute time frame, right? So I could have, from the breakout, we broke the market structure, failed swing, and we had another 1 minute entry trade. So I was in this trade myself. I remember that. I hope we're learning something, guys. Are we getting some value out of this? Now, this very 1 minute area that we marked on the, when price was around this area, I'm gonna put, let's put my marks there and see how price react of this area once we get back to this same area. I was in this trade also, so I know exactly what is about to happen. But yeah, let's follow it. Now look at that. We marked this trade off here on 1 minute time frame. Let me go back. Why I marked that area? The reason why I marked that area was because this was the last sell candle before the break of market structure, right? Liquidity grab, sell candle, buy, break of market structure. Now there is the area I wanted to enter the market. There is the area I wanted to enter the market. Now let's go back to the 1 hour time frame. Let's play and see how price came back and did us justice. Same line, right? And look at that. Our first target is there. 1 to 36. And that is where gold is currently swimming at. Right? That is where gold is currently swimming at. Can we look UC long term? My time is fast spent in this session. Yeah, I'm gonna finish up here, but then yeah, definitely on our next session, I will try and look at UC on long term and what UC is doing really. Yeah, I'm really sorry about that. I don't want to keep people waiting on the call for too long. The absorption rate is not going to be better. Let's keep it simple. Let's keep it sweet, and let's keep it informative. All right. Where would we enter here? I just showed you where I entered. That was the buy right there, right? That was the buy right there. So if you go in there, I know some few people that got in there, so they're aware. I know some few people on my WhatsApp group that got in that buy. Is there another entry? Okay, so if you're asking me, is there another entry? Personally, all this price action is very unhealthy, so I can't really tell you if there is going to be another entry, right? But if I look around here, we've been mitigating all the buys, right? So I could either look into this particular wick right here for a re-entry. All right, that's the only area I look for a re-entry on buys. Apart from that, I won't look anywhere else. Let me actually drop down a little bit more. Yes. So we have some sort of mitigation right here, right? Breaker block set up right there. For this area, you can look in this area, 1715.920 area for possible re-entry. Apart from that, I can't really see anywhere clear. I can't see anywhere clear. Everywhere else is dangerous to enter. Enter from here with your stop loss right there, and then to continue looking for the highs, right? That's it really. So with all this said and done, guys, thank you all for jumping on the call. I hope I've done you justice, teaching you something new about how the market moves, and hopefully this can help you shape your entry and get your trading better. When you think it will retreat 50%, man, the price action right here is dead. It's dead. So why did this right here not retreat 50%? It don't want to. Why did this not doing it? It don't want to. So the cleanest area I could look for a re-entry right here is there. That's it. Simple as that. And if it takes me out, it takes me out. Thank you for your time, for sharing your knowledge. Thank you, Francis. I thank you all, guys. I really, really do. I appreciate you being on the call. I don't take your time for granted. If you're not here, I am not here. So I will try and always do my best to help you get to where you want to achieve. Once again, let's all have a good day. The market is not so great today. So if possible, just stay away and then wait for tomorrow. We get some more setups coming. Watch out, guys. I'm out.